Democrat-run cities are killing their local economies and their local housing markets. That's my inescapable conclusion from looking at the data that I'm about to show you in this video, which is real-time data on the economic activity going on in different cities around America. When we look at New York, San Francisco, Boston, Portland, Los Angeles, things do not look good in terms of economic activity, and that is bleeding over into the local housing markets, which are significantly underperforming the rest of the country. Meanwhile, there's a whole other part of America, places like Miami, Nashville, San Antonio, and Phoenix, which are back to pre-pandemic levels of economic activity, and their local housing markets are booming. When you look at this data, it becomes very obvious that Democrat-run cities and states are hurting themselves, they're hurting their population, and they're hurting their real estate markets. If you're a prospective home buyer or real estate investor, you need to be paying attention to this real-time data, which comes from the OpenTable restaurant app, as well as the political affiliation of the city or state you're buying in, because unfortunately, Democrat-run places right now are not good places to be from an economic and housing market perspective. And so we're going to get things off by comparing two cities, Miami and New York, and we're comparing them in terms of how many restaurant reservations are made on the OpenTable restaurant app. And this is data that OpenTable makes publicly available. You can track how your city is doing in terms of how many restaurant reservations are made, and this is a great bellwether of economic activity. And what do we see here? We see that in early February, Miami is 15% above its 2019 levels of restaurant reservations. So what that means is in early February, 15% more reservations for restaurants on OpenTable are being made today than in the same period in 2019. Meanwhile, New York is down 65% in terms of people going out to eat at restaurants compared to 2019 levels. And as I'm going to show you later in this video, this data point, OpenTable restaurant reservations and how they compare to pre-pandemic levels, is extremely correlated, extremely predictive of how cities and housing markets are performing. You're not going to believe your eyes when I show you the relationship between OpenTable restaurant reservations and home price growth over the last year. It is striking. But before we do that, I'm going to have to show you this data on several more cities around America so you can see just how striking the differences are in terms of people going out, eating out, in local economic activity. Dallas versus San Francisco is much the same. We can see here through early February, Dallas is down about 16% from its 2019 levels. Several months ago, Dallas got back to normal, but Omicron knocked it down a bit. As it knocked down San Francisco, fewer people were going out during Omicron, but the difference is, while Dallas is down 17%, San Francisco is down 61% in terms of restaurant reservations. And we can see going back to the summer, the relative difference between the two was much the same. The best that San Francisco ever got back to was 40% below pre-pandemic levels. How about Tampa versus Portland, Oregon? We can see here Tampa has been consistently above its pre-pandemic level of people eating out since about May 2021. It's been above this dotted line, meaning more people are going out now in Tampa than before the pandemic. Meanwhile, Portland is 61% below, and the highest it ever got back to was 41% below. And this is truly shocking data. I was shocked when I looked at this. I mean, on one hand, I did have a suspicion that some of these Democrat-run cities like New York and Portland and San Francisco would have less people going out to eat at restaurants, would have less economic activity. But I was not expecting that it would be on the order of a 50% decline in the number of people going out to eat, which is a huge deal. Because after all, if you're living in a city like New York or San Francisco or Boston or DC, which are also cities that are struggling, one of the reasons you live there is to enjoy nightlife, is to go out to eat, is to go to bars, is to go to entertainment venues. And very clearly, this data from OpenTable is showing that that is not happening. People seem to be scared to leave their homes in these cities. People don't want to socialize. They don't want to go out. And that's a major problem for these local economies. And we can see a very clear relationship looking at a list of different cities in terms of their restaurant recovery. And very clearly, the The recovery is happening in states like Florida, Arizona, and Texas. This is comparing restaurant reservations over the last 3 months from November 2021 to January 2020 compared to the 2019 baseline. We can see Miami was up 17%, Fort Lauderdale up 13%, Scottsdale up 13%, San Antonio, Tampa, Nashville, Orlando, all up compared to their pre-pandemic levels. By and large, Florida, Texas, and Arizona, they're booming economically. People are moving there, people are visiting there. If you guys are enjoying the data in this video and you want to see more of it going forward, there's an easy way to do that. Just smash the like button and leave a comment below. But then on the other end of the spectrum, you have a city like Minneapolis, which is down 58% in this period compared to pre-pandemic norms. As discussed, San Francisco is way down, minus 51%, Seattle's minus 50%, Portland's minus 49%, New York, Philly, Honolulu, DC, Chicago. It's a sea of red. It's a bloodbath. It's a recession in these cities towards the bottom of the list. And in just 1 second, I'm going to show you how that data by city on restaurant reservations correlates with home price growth over the last year. You're not going to believe it. It does not look pretty for those Democrat-run cities like San Francisco, New York, and Boston. However, before that, we just need to address more broadly what this is showing, right? A decline in people going out to eat. That might seem like a very specific and simple way to analyze an economy, but I believe it's actually a great bellwether of economic activity, because if people aren't going out to restaurants, they're likely not going out to bars, they're likely not going out to entertainment venues, they're not likely seeing concerts or sporting events in the same way, and that's going to have a massive economic and real estate impact on the city you're living in. We compare this restaurant reservation data from OpenTable by state to the level of pandemic restrictions that existed in these states, which is on the y-axis, data from Wallet Hub, which ranks the states from 1 to 50 in terms of pandemic restrictions. 1 was least restrictive. A state like Florida was 2. A state like Texas was 5. Lower restrictions there. We see restaurant reservations above 2019 levels: Florida, Texas, Oklahoma, a place like Arizona. If we go to the bottom left of this graph, DC, New York, Massachusetts, Pennsylvania, Illinois, the states with the most pandemic restrictions had the biggest drop-off in restaurant reservations. And folks, this is not rocket science, right? It makes sense when for 18 months a local government, whether it be city or state, scares its population, demonizes people who don't social distance, enforces all types of mandates related to masks and vaccines. Well, it would make sense that fewer people would want to go out to eat. It would make sense that fewer people would want to go to a bar or to participate in local society and economy. And I suspect the leadership in cities and states like New York, Illinois, Massachusetts, Washington, D.C., they might tell themselves that they still made the right decision to, quote unquote, protect public health. And I don't know, maybe they did protect public health by shutting things down with lockdowns and enforcing all types of mandates with masks and vaccines. I don't know. I'm not an expert in that. My expertise lies in assessing the local economy and the local housing market. And from looking at this data, it does not look good for Democrat-run areas. And this is the part of the video I know many of you have been waiting for. I took this OpenTable data in terms of change and decline in restaurant reservations and compared it to home prices and home values in these cities and how much they've grown over the last year. And I was utterly shocked by the results. I could not believe my eyes in seeing just how much this restaurant reservation data explained how home prices changed in these cities. And you can see that exemplified on this graph, where on the x-axis, we're taking a look at the percentage change in OpenTable restaurant reservations compared to the 2019 baseline, and we're comparing to home value growth in 2021 data from Zillow. And what do we see? A massively strong relationship, this trend line exhibiting an R-squared of 0.55, which means that more than half of the variation in home values is explained by the change in restaurant reservations. You can see here the highest appreciating cities in America: Austin, Texas, Naples, Scottsdale, Tampa, Florida, Las Vegas, Nevada, all performed well in terms of people going out to eat, making reservations on OpenTable. Meanwhile, the worst performing, Minneapolis, New York, Cambridge, DC, all places with actually negative home value appreciation after you adjust for inflation, well, they had the biggest declines in people going out to eat. So here we now have 2 data points. the OpenTable restaurant data point and the Zillow home value data point, both saying that Democrat-run cities are struggling. Folks, this is two separate data points that come from different companies that measure different aspects of the local economy. One looks at people going out to eat. The other looks at home values, very independent of each other, yet they're telling the same story. Democrat-run cities in blue states in particular are really struggling from a societal and economic perspective right now. And very clearly, the leadership style and the decisions and the mandates and the rules being enacted in these cities and states, these Democrat-run areas, are having a negative impact on society and the economy and the housing market. And I sincerely hope that leadership in states like California and New York can wake up to these realities. Look at what the data is telling you about what you're doing to your economy and your society. It's not good. And if you don't reverse course, there's permanent damage that is going to be done. Now, before signing off here, I'm going to address a question, an elephant in the room question, that I'm sure many of you have after watching this video. Many of you are interested in real estate. A lot of you are looking to buy your first home or investment property, and you might be wondering, should you use this restaurant reservation data from OpenTable to help you decide where and when to buy a home? Because after all, looking at that scatter plot comparing restaurant reservations to home values is pretty impressive. Very clearly, restaurant reservations are a bellwether of economic activity and the economic health of a region. Should you be using that to inform your decision about where and when to buy a home? I think it depends. And on one hand, I would certainly evaluate this data for Democrat-run cities around America to see if it's improving. If we start to see improvement in the amount of people going out to eat in a place like San Francisco, Seattle, Portland, or New York, that would be a good sign that city is on the way to recovery from an economic standpoint. And if you see those restaurant reservations go back up in the next couple months, that could be a sign that maybe it's a time to start thinking about buying in those Democrat-run cities. Meanwhile, if we see a place like Washington, D.C. continue to trend 40 to 50% below the pre-pandemic norm in terms of people going out to eat, that might be a sign that there's no recovery yet and you should wait. But I would caution you against using this data as a justification for buying in red state housing markets like Austin, Nashville, Tampa, and Miami. I believe many of these cities, despite their strong relative economic health, are in big housing bubbles right now. For instance, prices in the city of Austin are up 33% in a year, while their restaurant reservations are the same as they were in 2019. So it's not as if the economy has grown that much, but home prices have grown a lot. So be careful in actually some of these red states and these red cities. You could be buying into a bubble and eventual housing crash. All right, everyone, I hope you enjoyed this video. I felt like I needed to get it out there. This is truly some amazing data from OpenTable. I'll encourage all of you to take a look and see how your city's doing. I'm going to have a link to it in the description. If you appreciate this content and you want to see more of it going forward, make sure to smash that like button. That's the best way to support the channel. Also become a subscriber so you can see this content going forward. I come out with 3 data-driven videos per week on the U.S. housing market and economy. You're not going to want to miss this content going forward. Until next time, this is Nick from Reventure Consulting signing off.